Hello, 5 documents that it is good for you to start getting ready for the tax season when it comes to your business. So the first one will be car mileage. The second one will be payroll workbook. The third one will be your bookkeeping journal. The fourth one will be your inventory management workbook, and the fifth one will be your assets workbook. So let's see if you can get through every single one of those. So the first one is car mileage. So if you claim car mileage on your business tax report at the end of December, it is a good idea to write down the total mileage driven on your car during the year. And when calculating the business mileage to deduct, that will come into play as well. So it's good to write that down on December 31st or January 1st. So you might want to have that on your to-do list. And also, if you are going to claim business mileage, you might want to take time to go through your record of those mileage driven and written, to make sure you have your business mileage written. You estimate your commuting and your other, what you drove for, other purposes like shopping and things like that for your household, so that you have those numbers ready when it comes to calculating the mileage to deduct, especially if you are going to use standard mileage, or if you are going to claim the actual expenses. You might want to have your receipts on hand and write down those expenses you have related to your car throughout the year, when it comes to gas, when it comes to toll fees, when it comes to parking fees, when it comes to repair, everything related to your car. You want to take time to make sure you have those information recorded for your business, and have the receipts all sorted out, and have them properly put away as well, to support what you recorded when it comes to those expenses. So the next document I will recommend you start working on to get ready will be your payroll. So if you have an LLC, for instance, that file tax as an S corp, or you have an S corp, or you have any type of business but you hire people that are working for you, you'll have payroll. The reason why I start with LLC tax as an S corp is because automatically it puts you, the owner, as the first employee of the business, especially if you are working in the business. Therefore, if your business is generating revenue, you'll be expected to pay yourself a salary. So therefore, you are an employee of the business. It'll be a good idea you meet your requirement as a business when it comes to payroll tax return or report to file and all that. But it's good to have your payroll workbook up to date when it comes to wages that you pay during the year to yourself or any other that are working in the business, and when you pay those, and if you make any payroll deposit during the year to IRS or your state, you might want to make sure you have all those recorded in your payroll documents or workbook. Because I use Excel spreadsheet to manage our business, that's why I'm talking about it and I'm referring to workbook. But you could be using accounting software, but those requirements will be more or less the same. So yeah, so just make sure you have the amount you pay, who you pay it to, for every single one of people working in your business, including yourself. If you you are an S corp and pay yourself salary, just make sure for every single one that you pay in your business, you know how much you pay everyone during the year. And each time you make those payments, you record those, because based on the amount, depend on the return you are filing, you might be prompt to enter your tax liability by month. If you are a monthly depositor, for instance, when it comes to deposit payroll tax liabilities, and you know your abilities is within a certain dollar amount, so as a monthly depositor, you could be prompt to list your monthly deposit. So just make sure you know how much you pay everyone by month at least. And if you make deposits to IRS during the year, pretty much make sure you have those things recorded, so that when you need that information for tax return purposes, you can find everything together, easy for you to walk through to use the information you need. So yeah, have your payroll workbook ready and know how much you pay everyone, how you pay during the year, and what your payroll liabilities is when it comes to social security, withheld from the employees salary or wages, the business portion of that as well. When it comes to Medicaid, withheld from the employee salary, the business portion of that, because the employee you will withhold a certain amount from the employee salary, your business will pay a certain amount as well. It's pretty much 50-50 up to they have threshold, but I'm not going to go into that in this video. But and then the income tax withheld, that you withhold that from the employee's payroll. Your business does now pay toward that is the employee wages that you withheld something when it comes to income, federal income tax to withhold. So yeah, just know if you withheld things from your employees, your staff members, and yourself wages during the year, just know, make sure you have those things up to date. For people that file Form 941, you will be able to, you in some way forced to have those things up to date, since you are filing a return on a quarterly basis. You just have to work on the last quarter of the year at this point, December, to make sure you have, or early January, to make sure you have that last quarter ready. For some of you that might be required to file Form 944, annual federal employment tax return, you have 1 year that you didn't do much of those reporting to the Fed. If you are not careful, you may not have a proper, you may not have been on top of your recording when it comes to that. So just make sure you have everything you pay everyone, you know, written down, and have an idea of your tax liabilities as well. So, and then you'll have your unemployment tax return as well to file. So you'll have unemployment tax liability to determine, and for a lot of those returns you'll have the state version of that as well. So just make sure you have your payroll document up to date, so that you can use that to file those those payroll tax return, related tax return. You'll be able to file them accurately. So the next workbook we'll talk about will be bookkeeping journal. So for your bookkeeping journal, which will be the third one on the list, is it will be good to have, you know, to by the end of December, your business bank account, the balance in it, to make sure you have that in your workbook as well. At least I like to record what is going through the bank account when it comes to increasing the bank account or decreasing the bank account, like income and expenses. I like to record those so that my workbook, the journal side of it, pretty much with reconcile with my bank account, have the same balance. That tells me that I record all the income that went through to the bank account and all the expenses that came out of it. On the same note, your business expenses, when it comes to your purchases, it will be a good idea to have all those written down, categorized in a way that, categorized by type of expenses they are, to make it easy for you to be able to file your return. If you are using a software, an accounting software, yeah, it's a good idea to properly categorize those expenses in it so that they are all in a category. They are all in the appropriate expense category. It might be a good idea as a business owner, at least once a month, we go through our documents, whether we use Excel spreadsheet, or we use Google Sheet, or we use an accounting software to go through our, let's just say our journal, to see if our expenses that we recorded during the month has been properly categorized. Does that make sense? But that way, by the end of the year, we know that everything is up to date for us. But yeah, it's good to have all your expenses written down so that you are not missing any expense that you intend to deduct on your tax return. So the next document we will talk about will be inventory management workbook. If you are a business owner and you have inventory, you track inventory, then it will be a good idea to make sure you have your end inventory up to date. You enter your purchases during the year. Your production out of inventory has been accounted for. Your finished product has been entered in inventory. Your sales, which will decrease your inventory level, all has been recorded for you to account for the cost of goods sold, and have your year-end inventory up to date to be able to determine the cost associated with the goods you sold during the year. So depending on your business model, you might have to file a form associated with inventories, and I believe it's form 1125A, cost of goods sold. So for sole proprietor, that file schedule C, or if you are an LLC, one owner LLC that didn't file to be taxed as an S corp, and you are a disregarded entity, your business is treated as a disregarded entity, therefore we will file schedule C. Your inventory section is on a schedule C already, cost of goods sold, but it's just the same principle where you will put down the beginning of the year inventory amount dollar wise, which will be last year year-end inventory dollar amount, your purchases during the year, and is where I tend to have out of inventory taken into consideration as well, and then your finished product that you add back to the inventory. So I tend to have all of that in one session. So pretty much your purchases during the year, and then your year-end inventory and cost of goods sold. So because you might have to file that form, is good to have those numbers up to date. So if you are in a business of making things or reselling things or private label things, you will have inventory, and if you track inventory, you manage inventory, then you might have that form to fill out to put your inventory related expenses there, because when you have inventory, you do not deduct the full cost of your purchases during the year, but you deduct the cost associated with things you sold during the year. Your inventory, your purchases gets capitalized as assets in your business until you sell them, and the cost associated with the portion you sold is what you deduct against the revenue that you generated from those sales, if that makes sense. So again, not everybody use that approach, but if you track inventory, it'll be a good idea to work on your inventory management workbook to make sure it is up to date. And it'll be good during this season, this month, if you have time, because depending on your business model, you might even be busier during this holiday season. But if you have time, it might be good to start working on those workbooks to make sure you have them up to date, so that in January, when that first quarter from January to April, that most of our business tax returns are filed, you are not anxious to file them because you do not have your document up to date. So the last document we'll talk about will be assets workbook. So if you purchase assets for your business asset or equipment, those are things that you purchase and you do not use it all in 1 year. It can survive multiple years. Those are capitalized assets. If you have those, a lot of business owners will file during their tax return, will use Section 179 deduction to expense the full amount of the asset. Regardless, it is a good idea to track your business asset, to know a business asset that you purchase for the business and put in service during the year, to be able to claim that deduction on your tax return, and be able to to know when you purchase them, when you put them in business, and to know if you were to depreciate them the right way, what year that depreciation will end. Because when you are filing Section 179 to expense the full amount of those business assets that you should have depreciated over a certain number of years, if you do not use it for the number of years you're supposed to use them, a lot of time the remaining, the number of years that you should have used it that you didn't use it, the depreciation you should have taken for that time frame can be reported back to your tax return as income using another tax form. For that reason though, for me, I just like to depreciate those business assets the simple route as possible. That way I just don't have all those options to work with, and at the same time, for business purposes, I do not like to buy business assets during the last quarter of the year, especially if the purchase will, the amount will be more than any business assets I purchased during the 3 previous quarters, if that makes sense. Because automatically it might put you in, if you are going to depreciate, it might put you in another category, and I like to use half year convention, if I'm even using the right term here, instead of mid-quarter. So therefore I keep that in mind. Although toward the end of the year you will have a lot of sales going on that you will need to buy things for your business, but because I depreciate my asset and I don't like to use mid-quarter convention, I like to use a half year. Therefore, I like to make sure I'm not making important business purchases toward around this month. If anything, I might prefer to do that in January, but just saying, it's just personal approach. Because I file our own business tax returns, I tend to be strategical about things so that I do not put a lot of pressure on myself when it comes to filing those returns. So I prefer to do things in a certain way to make those returns a little bit easier on myself. But again, it is my preference. But just know that it will be a good idea to track your assets, to know the value of your assets, how much you pay for them when you purchase them, when you put them in service, to have those things up to date in your workbook as well. And if you prefer to depreciate the instead of filing section 179, yeah, well, it is important you have those assets well in your workbook, know how they will be depreciated as well. Again, for your returns, especially for Form 1120S or Form 1065, it's good to use a software to file those. But those are the 5 workbooks that as a business owner, I would say more or less you'll have all of those, maybe extra, more, or maybe less than those if you do not have employer. You are an LLC and you are the only one working in it with the members of the LLC working in it. You are not paying yourself a salary, therefore maybe payroll may not be an issue for you. If you are now your business model, maybe it's an information business, you do not have physical products, maybe inventory may not be something for you to worry about. So there are some of those documents that may not be an issue for you, and based on your business model, you might have even some more to work with as well. But just know that those are the basic ones that more or less you might have. And if you have time, it might be good to start working on them, getting them ready, so that once we start the new year, it's now when you wanted to get those documents ready, because that's when you wanted to start scheduling your time to start preparing those returns, especially if you are going to prepare them yourself. If somebody is going to do it for you, then you are going to hand over those reports that you have, that they will use, pull numbers from to file those documents for you. So you wanted to have your business financial document ready to be able to tackle your tax season during the first quarter of the year. And if you have a fiscal year for your business, some of those returns you might file another, not necessarily during the first quarter, especially when it comes to Form 1065 and 1120S. But for many people, those main business returns will be due during the first quarter. 1065 and 1120S are due in March. So I believe March 15. So if I'm correct on that, so it's good we start getting ready for those. And before that, even in January, you have a long list of tax returns that are due, especially payroll related tax returns. And I recorded a video related to that for the business tax returns that are due during the first quarter of the year. So you could check in the description. I will remember to add that as well. Thank you so much for your time. We thank you very much for watching our videos. We thank you very much for all your comments, and we thank you very much, you all that subscribe to our channel. I'm Afiabi Liberman, Cross of Liberman Consulting L.L.C YouTube channel, and in our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. Thank you. And filing your own tax return is one way to keep your business low. Is there any financial workbook or any business workbook that you keep up to date that I didn't mention? Will you please share that with us in the comments? Thank you.